All right, guys. So we have AMD, Google earnings. Really, the big one is Google coming out pretty soon. Be ready. I'm a little bit late. I was making myself some nachos. We just got off a Top Step TV. We're going to be looking at Google earnings today. And let's take a look. Google currently breaking highs, dragging the rest of the market up to 170s right now. Looks strong. Honestly, looks very strong. Can you guys hear me? Sound check. 1 2 1 2. Can you see? You should be able to see everything clearly. Google today. Q3 earnings coming out. We just got off of the Top Step TV. We also have AMD earnings, which are massive. Google expecting 183 a share. I'm not sure what their revenue is expecting. 72.85 billion in revenue for Google. 183. Again, Google is expecting 183 a share on revenue of 72.85 bill. We will put CFTC, get some music rolling here, but again, Google breaking highs. We'll get that rolling here. Actually, let me screenshot this. They release after 4 p.m. Eastern Standard Time, after 4 p.m. So 4 p.m. Eastern Standard Time, along with the earnings call at 4:30. So I'm just happy to see I'm just happy to see a freaking earnings call that's not at 5:30 like Tesla. Put that up right there. So yeah, there's Google. We'll get some music going here. We got a lot of stuff we're covering. We're going to be streaming both earnings calls today, both AMD and Google. So let me get some music here. You should be able to hear us sounding clear. What's up, Nate? Faye? Yeah, we're going to do a poll. What do you guys think we're going to do? Do you think Google beats or misses today? All right, here. I'm going to do my poll. Does Google beat or miss? It's Alphabet, technically. So we'll do the simple. Does Google, G-O-O-G, Alphabet, Q3. Vote on the poll. Let me know how you feel. AMD results coming out at specifically 4:15 market time. There we go. Again, we're going to put AMD up here as well. Here's AMD. A lot of stuff breaking highs. Looks strong. Vote on the poll. It's Q3. Let me know what you guys think. Sorry, guys. I'm out here eating nachos. I'm trying. All right, I'm trying. Bitcoin about to break all-time highs, which is crazy, honestly. Look at Bitcoin about to break all-time highs, guys. It's very, 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 very close. The technical all-time highs for actual Bitcoin is at 74,000, roughly. We're going to call it 74. We are basically there. We're basically there, chat. Do you guys think Bitcoin is going to run if it does break highs, which I think is pretty probable at this point in time? Okay. Google up 170. What happens next week? Look at Google up here. So this is a 1 minute chart on Google. Look at this. 170s. Load. Do any earnings come out next week? And just like that, a crash is predicted by someone. Yeah, honestly. People got to learn not to make definitive statements, man. Like, they really have to learn not to make definitive statements. Nobody freaking knows what the market's going to do, especially on a short-term basis. But for whatever reason, everybody and their grandmother, like, no matter what, everybody wants to make like these really definitive statements, and nobody freaking knows anything that's going to happen. It's all probability driven. All right, so next Monday we have Palantir earnings too. All right, so there's a turnaround. Look at the Bitcoin. It's up there, guys. Like, look at Bitcoin. I got to turn a weekly chart off and put on like a 10-minute chart. Maybe I should put a 1 minute chart up for Bitcoin. Yeah, but Bitcoin's getting very, very close to previous all-time highs. Very, very close. What do you guys see as Bitcoin's all-time high? And then again, today we have AMD after the bell as well. In 30 minutes, AMD after the bell as well. It's getting close, man. Honestly, tomorrow we have economic reports as well. We have... yeah, we trade a little bit of everything, to be honest. So tomorrow, we have big earnings tomorrow. I know that. We have Meta, Microsoft earnings tomorrow. But in terms of economic reports, we've got, we've got ADP non-farm employment GDP data tomorrow. 3.1% is what's expected. Last time it came in at 3%. Payroll data, prelim payroll data expected at 113s. And then the non-farm payroll data on Friday is expected at 110. So payroll is expected to go down dramatically here. Here's Alphabet, and then here's AMD. Sorry, I'm trying to eat my nachos. AMD breaking highs as well on a 10-minute chart. So somebody's correcting me on my revenue. I'm trying to see if I got it right. Did I get it wrong? You think layoffs will help or hurt Visa? Generally, layoffs help because it's margin improvement. Now, it's not always the case, though. If it's a dramatic or desperate move. Like if it's a brash decision, it's less helpful usually. I'm showing revenue estimates. You might be looking at Class A shares. You know, one of the shares has more voting rights. Class A shares have more voting rights than Class C shares, which is GOOG is Class. Which one is this? GOOGL is Class A. So GOOGL is Class A. Just to put this into perspective, GOOG is Class C. Okay, so Class A shares have more voting rights. And so an example of this is like GOOGL shares have more voting rights than GOOG. It's the nachos. Yeah, you never know how Wall Street is going to react. Their PE is 30. Yeah, it helps. 30 is not super high PE though, Detra. Not right now. High PE is like 15, 20. So 30 is not really super high, I would say. It might be, I don't know, but yeah, Google, very strong company though. Very strong company. Up to 170s. I'm gonna put AMD up. I haven't been watching Visa as much, but if Visa's PE ratio is 30, that's actually pretty low. Right now in markets, like, you know, Nvidia has 66, 65. Tesla has like 50. AMD just broke highs again. And so an interesting story of this earnings report is AI, microchips, and what that means for everything. Yeah, I don't know what AMD earnings are going to do. AMD, we can look at, I always like to look at, look, so I'll put this up. People like to criticize these companies, but look at Google's EPS. So this is margins, right? So this is an EPS graph of Google. Look at its margins. Its margins are great, honestly. So look at their EPS graph. It has only had one losing quarter. This is how powerful of a company. People can say whatever they want about Google. Google has only had one losing quarter in the last 14 years. That's impressive. I look at a lot of companies' earnings. One losing quarter EPS wise is impressive. And look at their trailing 12 months. Really, really good. Really, really good. Now we can take a look at some other companies here. We can take a look at, like, let me see. AMD. Again, is this AMD? Here's AMD's. Not nearly as impressive. Not nearly as impressive. I'm trying to make sure this is AMD, to be honest, because yeah, this is AMD. So AMD's, you want to see how much better of a company. AMD's had some light EPS recently. So microchips as a whole have been a struggle. Now let's take a look at Google revenue. Here's their revenue. Look at that revenue graph. That's nice. Okay, so today they are expecting 72.85. So if they hit this, right, they're gonna dip a little bit in revenue. So they're expecting right around here. So if they hit this today, they're gonna be right around this level, right around that. So again, they're gonna be decreasing a little bit if they do come in at what they expect. Now, it's also possible they come in higher than expected, but yeah, they're gonna be they'll be maybe like right here. They'll be a little bit higher than this actually. So if they come in as expected, they'll be about right there. Now, it's still a decrease, but it's still a very strong revenue trend. And we can also look at AMD to see what they look like in this regard as well for revenue. So here's AMD's revenue. Still decent, but AMD today is expecting 671. So if AMD hits their revenue, that'll be the highest quarter they've ever done for revenue. If they hit their revenue expectations, which will be right around there. So that is the earnings for today. AMD has the bigger expectation. And so, again, we'll see if it hits it or not. We're going to cover both AMD and Google. All right, so we're starting to look a little weak. I might trade a little bit of futures today. Google expected revenue for quarter 3 is 86.22. See, people. Let me look this up on a different site. Okay, so yeah, you're right. It's 86.33. So if Google hits that, I guess I'm wrong here. I'm not sure where I got this data, but so yeah, you're correct. So Google expectation is 86.33 billion is what it is. 86.33. So if Google hits that, yeah. Yeah, let me fix this bottom banner now too. Okay. Yeah, so if Google hits that, let's see where they're at in terms of historicals for their revenue graph. So yeah, if Google hits what they're expecting, they will have their strongest quarterly revenue ever, which is good, obviously. Of course it's good. If they hit it or not. If they miss, then, we'll see what happens. But still, Google, their financials are strong. What's their current PE ratio? Let's take a look. Honestly, I'm a spice whip. I can't handle it. All right, so Google PE ratio. Google today, again, expecting 184 EPS revenue, 185 EPS revenue of 84.5 billion. That's GOOG. What about GOOG? Maybe I'm looking at Class A shares. Maybe that's where I'm running into problems. What is their revenue? No, it's about the same. Okay, so let's calculate this. Let's see what Google's PE is. I'm just gonna manually do it. So today is 185 expected. Last time they showed. Wait. No, actually their revenue's higher. So okay. Okay, so last time they showed 185. Today they were basically expecting the same thing. 185. Wait, I don't know why. 1.85 plus 1.51 plus 1.59 plus 1.44. All right, so their yearly EPS is about 639. What's the current price? 170. So they have a PE ratio of 26 for Google. That's great. That's a great. I mean, that's not. It's definitely not perfect, but it's also not horrible either. Like, this is pretty good versus a lot of other tech companies in the Magnificent Seven. A 26 PE ratio. Not too bad. I haven't looked at their forward PE yet, but not bad. You know, 26.6, not bad PE ratio. Let's take a look at AMD. Same thought process here for AMD. Let's see what we get. All right, AMD. And again, this is not their forward PE, chat, just to clarify. This is not their forward PE for AMD. 6.9 plus 0.62 plus 0.77 plus 0.68. 276 divided by 166. AMD has a 60 PE ratio, obviously noticeably worse. Google, very good PE ratio. This one, they're not that good. Yeah, I'm hungry too, guys. I'm sorry. Honestly, I'm still hungry. I don't have enough food here. Today's a busy day. I'm doing my best. We're trying over here. Bear with me, chat. Yeah, same PE ratio as NVIDIA and AMD. Growth is a little slow. And if we look at AMD's revenue, we kind of see a similar thing. Like, look. You know, they've stagnated a little bit in terms of revenue. But, I mean, it's kind of what all tech has seen here. So, like, I mean, we've seen this box of stagnation in terms of revenue over the past, like, few years, really, for some earnings. And so, I mean, it is what it is. A lot of the Magnificent Seven tech stocks, we're seeing a very similar thing. If we take a look at, like, Amazon, the only one that's not behaving in this, Amazon, you know, we do see a little bit of a window of stagnation here. We could take a look at, what's another Mag 7? Microsoft. You know, they're actually moving up. So Microsoft, one of the ones I know doesn't look like this, I think, is Meta, right? Meta's doing great. Yeah, Meta's trending higher as well. So a couple of these microchip stocks, if we take a look at NVIDIA, I think the trend is really microchips behaving this way, where we have that. NVIDIA's still new. What about Supermicro Semiconductors? Supermicro has pretty good revenue as well. Doesn't Supermicro have earnings coming out pretty soon? You seem to like Google over AMD. I think that's just your bias, HB. No offense to you, but I don't like either one of them more than the other. I'm looking at their PE ratios, their numbers, and their trends, right? So it has nothing to do with me liking one stock over the other. It has to do with Google has a lower PE ratio. Its revenue trend, let me see. I haven't even looked at its revenue trend. I know Google's EPS, but at the same time, so here's the thing. So not to excuse AMD a little bit, but if we look at their EPS trends, so if we look at AMD EPS versus Google, we're going to see a worse trend. Why? Because it's a newer market. Microchips have only started to take off in the last few years. But it does obviously have worse margins. Margin-wise, like EPS is earnings per share. It has to do with margins for the company versus revenue, which is kind of like the ceiling the company has to earn profits. Obviously, AMD has a worse margin trend than Google, but Google is obviously a more established company as well than Alphabet. Alphabet's a more established company. It's been around a longer period of time. And so I don't know if we can necessarily, like, we can look at growth, but I don't think we can judge AMD too harshly. I think we still have to wait to see if microchips catch up, if that makes sense. And time will tell. Yeah, exactly right. Don't confuse facts with opinions. I'm looking at facts here. I'm not saying one's better than the other. I'm looking at the actual PE ratio, the facts behind it all. I'm looking at the actual revenue graph trend. I'm looking at the actual EPS. Now, you might like AMD more, and you might be up in AMD, down in AMD, and underwater in AMD, heavily invested in AMD. It doesn't matter. You got to take emotions out of it. Like, me speaking facts shouldn't, you know, make any difference towards you. If you like AMD, and I like AMD long term, I think AMD will probably go up. I think AI is obviously the future of technology, and I think as it gets bigger and more needed, AMD is going to grow with it. You know, it should at least. Who knows? There's always some variance, but it should be fine. All right, let me look at our poll numbers here. Currently, 75% saying beat, 25% saying miss. Like I'm looking at this Timothy Chalamet. I don't know if I'm saying this right. I'm looking at this Twitter page about a look-alike competition, and I just end up feeling bad. Like, look, not about myself, but like, if the only thing you got going for you is that you look like somebody famous, not even like super accurately, like you kind of look like them, but if you kind of look like somebody super famous, that's not the big flex everybody thinks it is. Like, I see the guy pretending to be Drake. It's like, dude, sit down, man. Like, do you want to pretend to be Drake? You know, like, what are the probabilities of something like that? Yeah, I'm looking at these Twitter. I mean, my ADHD is just gonna like looks at this dumb stuff and it just kind of gets me. Sorry, guys, but yeah. So we got 300 people here already. We got 12 minutes before Google drops. They're supposed to drop right at 4 p.m. Eastern Standard Time. We'll see how that goes. Look at AMD rip it up though. It's at 167.40s right now, chat. 167.40s. Yeah, kind of looking like Brad Pitt. I mean, yeah. I mean, I don't, you know. If they did a Forrest Griffin win or Paul Felder, I'd join it, you know, win. You know, top 3 lookalikes ever. But still, the point is, like, who's going to go to that? Like, who cares that much if you slightly look like a celebrity? Like, if that's what you got going on, you got to find something else to do. All right. AMD going at 167.50s, chat. It's moving. We'll see if we hold. All right, so the market, guys, is going absolutely nuts. So the closing bell is almost here, man. But what a crazy market today. Honestly, such a strong market. Look at Google breaking highs before the end of the day. Honestly, look at AMD up there, too. All right, chat. We're doing our best here. Honestly, I'm still hungry. I'm going to have to wait. John roasting lookalikes. I'm not roasting you if you look like a celebrity. All right. I'm roasting you if you make that a part of your identity. You know what I mean? Like, look, people say I look like Forrest Griffin. Am I going to show up to a Forrest Griffin look-alike contest? Of course not. The only way is if I really, really looked like him, you know? But again, you got a bunch of dudes that just kind of look like him, and they don't really, like, you know it's not him. And so why are you showing up then, bro? Like, you know, like, don't base your personality around that. Like, find something else to do. I'm not trying to hate. I'm just being honest. Yeah, I would just be very careful. Markets are up big in anticipation of today. Tomorrow we have big earnings. We got economic data. We got GDP data. We have prelim payroll data tomorrow. Thursday we got PCE, core PCE. It's the Fed's preferred inflation metric. Friday we have non-farm payrolls and unemployment data. And between then we also have Apple, Amazon, Meta, Microsoft earnings and more. So we got so much economic reports and data and catalysts coming out in the next 3 days, as well as the Fed rate decision next week. I would be careful betting on any of these reports. Again, I've said this before, but if you're taking some massive position, it's fine if you're investing in AMD or investing in Google, which is what we're going to cover. That's one thing. It's a completely different thing to take some gambly, huge position trade based off of the volatility that we're going to get from this event. Like me taking a big position, waiting for the results to happen and trying to ride it up or down, that's dumb. Makes no sense. The edge is virtually nothing. It's super variance driven. Like it's just never going to work out for you in any consistent way over time, right? Like you might gamble and make a bunch of money, or you might gamble and lose a bunch of money, but what's the point of it? You know, the only people really doing that are people who, you know, are addicted to gambling. No offense to you all. All right, guys, we got 8 minutes. 8 minutes. Convo is weird. Well, I'm responding to the chat, which in turn responded to me talking about something I saw on Twitter. I also drank way too much tea, so I'm kind of hyper. I can feel it. I had to go on Top Step TV, so I put 2 tea bags in here. And now I'm all jittery, guys. Top 3 most jittery person ever right now. But we got 8 minutes left. I'm doing my best here. But, again, the big question is we got so much stuff going on this week. Tomorrow we have GDP data expected at 3.1%. So everybody's saying the economy's weak. I'm assuming that we're going to get strong. I think we could get upward action. I think that the market's going to be strong leading into the election is what I think. I think the stock market's going to go up pretty much regularly this week. I think most of the earnings reactions are going to be good. I think economic data is going to be strong. Although that was my theory this morning, and the JOLTS report came in lower than expected this morning. And so, again, we'll see. Also, if you want to day trade, try Top Step out. Top Step funded account program and futures. They give you a demo. They test your skill with it. If you lose, you only lose the monthly subscription. It's the perfect test of skill because there's no commission and there's 0 PDT rule in futures. So I can day trade the S&P, the NASDAQ, basically the SPY and Q, the Dow, the Russell, gold, currencies in some ways, and there's no PDT rule. The patterns are super, super similar to blue chip stock patterns. No PDT rule. Top Step X is basically 0 commission platform for futures. The edge is there. They give you a demo. They test your skill with it. If you pass the test, they fund you $50K to $150K with a 90% split. If you lose the base one, you're only out $49. Your risk is $49, 90% split once you're funded, and they paid out over $100 million in the last few years, I think. And so they're an affiliate or sponsor of mine. I'm biased. They pay me money. But check them out if you want to learn to day trade with limited risk. I do think it's like a beautiful, perfect middle ground of pressure. You're still risking something, but you're risking $50. And so if you lose, you're not going to lose 3, 4, 5 grand, 20 grand, like a lot of new day traders end up doing, trying to look cool. But still, with that said, we got 6 minutes, chat. 6 minutes. Whew. All right. Yeah, Palantir earnings next week as well. Hey, good luck, Kai. All right. Look at this big turnaround before the closing bell, chat. So we have 5 minutes left. Look at Google turn. Look at AMD turn. Honestly, bro, I had some traders in the chat making fun of me when I was on Top Step TV. But my short fading the highs of the day would have worked beautifully. Beautifully. Like, they were making fun. And I talked about it when I was on stream. The people making fun are the people who have no clue about trading. Like, anybody, like, shaming somebody else for losing in an individual trade or act like, I see this all the time. I get into a trade and people are like, oh, what a dumb trade. You know, that's never going to work for you. Scoff. And then it just dumps, like, say it's a short, then it just goes heavily in my favor. And then cricket, you know, or I get into a long trade and they're like, oh, that's going to crash on you. Dumb trade. And then it just rips up and then it goes cricket. And so if you hear somebody acting like that in the chat, just know those are usually the least experienced people. And it's kind of, to be honest, it's Dunning-Kruger effect. That's Freddy Krueger's brother, you know, Dunning-Kruger the third. I drank too much caffeine, guys. I'm trying to stay awake. I got AMD earnings too. Hey, thank you so much, Rodrigo. Rodrigo says, I started watching you a few weeks now, and you are right a decent chunk of the time, and your coverage of events genuinely do help. Thanks so much, man. Yeah, no, again, if you look at my long-term, like, predictions, I'm usually pretty on point with stuff. I mean, I like to toot my own horn, definitely top 3 greatest ever, but I'm also wrong a lot as well. But in terms of economic stuff, I've been pretty on point with it. Seriously. I know it's kind of hard to tell when I'm serious or not, but I've been pretty right about stuff. Like, I was correct about the general market direction over the last few years. I was correct about the rate decisions. I was correct about the CPI. And this week will be interesting. Like, tomorrow's GDP report will be interesting. But anyways, the market's about to open, or the market's about to close. Google earnings are scheduled to release right at the closing bell at 4 p.m. So right at the closing bell, their numbers are supposed to come out. Yeah, so to put this in perspective, I was shorting the E-mini. Yeah, I was shorting the E-mini at like 890s or something like that. I can't remember exactly where I got it. Or no, I was shorting the E-mini. Yeah. I was shorting the E-mini way back here. At like 882s, 880s. And so now it's down to 868s. All right, guys, 3 minutes. Let's see what we get. I'm going to put it in sub-only mode. If you haven't already subscribed, I'm trying to hit 150,000. And so if you have not already subscribed, hit the notification bell. Yeah, we're going to cover all the major earnings. Top 3 is very humble of you. Yeah, I know for sure. I'm really top 2.5. But, you know, I'll humble myself to top 3 ever in the world. Top 3 for sure. SPY's hitting the volume weighted average price level. I think this could be a bounce level, but here's AMD. So AMD is scheduled to release right at 4:15. Google's scheduled to release right at 4. So we're going to cover all of it, but we're going to stream the full Google earnings call here. And we also have another stream that's going to stream the full AMD earnings call as well. So we got both of them going on. A minute and a half left. Yeah, do me a favor, hit that subscribe button if you haven't yet. We appreciate it. We got 1 minute left. We'll see how it goes. One minute. Yeah, they're just trying to rub their negative energy on you. 100%, man. It's, you know, they're mad I'm on like a big show like Top Step TV is what it is, right? But in the end, I talked about it on Top Step TV. Like, I set my bar really low, expectation-wise. And so, top 3 worst ever. If I can outperform that expectation, I'm happy with it, you know. Again, SPY bouncing right at the VWAP here. We got 30 seconds, chat. 30 seconds. All right, here we go. All right, be ready. Report's about to drop. We also have, again, AMD supposed to drop. Not that far away from it either. So, be ready. Here we go. 10 seconds. Google all the way down to 169s. And... all right, there's the close. Watch Google, because Google's set to release right at 4 p.m. Eastern Standard Time. It's not out yet, but it's set to release right around now. All right, so pop up a little bit. It's up some. Nothing yet. Waiting for Google. Nothing yet. Waiting for Google. Slow price action. Watching for AMD. Nothing yet. You'll see when they're out, so they're a little bit late releasing. AMD's reporting at 4:15. At least that's when they're scheduled to. We don't know for sure. AMD's heading up in anticipation of it, though. Neither of them are out with their earnings yet. We'll know. You'll see the movement. But, all right, we got over 1,000 people live watchers. Thanks so much. Caesars Entertainment posted. We'll put them numbers up. Still waiting on Google. Again, subscribe if you haven't yet. Bring me closer to 150,000. There's Caesars Entertainment. 4-cent loss per share. Expected 14. Revenue of 2.9. Expected 2.92, so they missed. AMD's moving up. All right, guys, waiting here. We got 1,100 people watching. Google's still not out yet, but AMD's testing highs of the day right now. Look at that. Wow. Nothing else outside of this is out, though. You'll see the numbers. Like, whenever this numbers actually drop, you'll see a big boom. Or big boom. Either way, it'll be a big reaction. This is not it yet. Even AMD pushing up. It broke highs of the day, but that's not it either. Honestly, Google's really close to highs of the day, too. It's at 171.70s right now. Highs of the day are 170. There's Google at 175. Look at Google's reaction here. Wow. Big upward move. 174s. Hit 175.30s, 176.60s for Google. It is out. Wow. All right, so yeah, Google is out. Amazon just broke highs as well. AMD just broke highs also. Google posted EPS of 212. They expected 184s. Revenue of 88.27 billion. They expected 86.45 billion expected. So Google beat EPS and revenue. Their highest revenue quarter ever for Google. Google is now all the way up to almost 180s at 178 right now. AMD shot up as well, but it's not even out. It's just following sympathy. Google posted 212 EPS versus 184 expected. Revenue of 88.268 billion. Better than expected. What a number here. Look at this. So here's Google's numbers right here. We're still waiting on AMD. What a move. A lot of tech stocks following it up in sympathy right now, chat. So a lot of tech stocks are following it up in sympathy. So Alphabet, huge move. 176 right now. 176. Big move. Yeah, hopefully you guys made some money. Again, 212 EPS, 184 expected, revenue of 88.26 billion. We're looking at revenue here. Revenue was their highest quarterly revenue ever for Google, for Alphabet. So that's good. That's nice. That's impressive. Highest quarterly revenue ever. Moved up. You can see just the sympathy alone from Alphabet dragged AMD up. So here's AMD, here's Google. Google went up so much it dragged AMD up with it. So, nice. Starting to dip down a little bit here. Wow. Yeah, all good, Marie. No worries. AMD finally dipping down with Google here, but what a move. Honestly, AMD turning a little bit. AMD results drop in 10 minutes, though. So we're going to cover AMD numbers also, like we always do. We got some other numbers that are dropping, but so far, Google, big one out. First Solar is out, too. I'll put First Solar's numbers up. Again, AMD is scheduled for 4:15, so we're scheduled for about 10 minutes for AMD drop. Snapchat's not out yet. Not that I see, at least. Let me make sure Snapchat's not out. I'll test it. Make sure. I mean, Snapchat is up a lot, but I think it's just sympathy. Y'all can correct me if I'm wrong. I don't see Snapchat out yet. But Google, very strong reaction. Again, do me a favor, subscribe if you haven't yet, chat. Hit the notification bell. Thanks so much. Chipotle? Let me see. Chipotle not out either. I'm looking for Visa too, but I don't see that one. So Visa is out. Visa posted. Hold on. Striker is out. All right, so Visa posted. Yeah, so Visa ended up. They actually. I don't see Visa yet. Has Visa moved? Okay, so Visa just released. Here, so Visa ended up posting. Visa posted 271 versus 258, revenue of 9.62, expected 9.49. So Visa beat EPS and beat revenue. I'll put those numbers up for Visa right here. There's Visa. Chipotle. Again, AMD's releasing pretty soon. Is Chipotle today? Yeah, I'm trying to look at some of my sources, but a lot of them are bogged down. Yeah, I don't see Chipotle out yet. We're still waiting on is Snapchat today as well? Yeah, I'm waiting on Snapchat. I don't see it either. Google's starting to head back up. AMD's releasing in about 7 minutes, though, chat. So be ready. 7 minutes for AMD. All right, so AMD dropping in 7 minutes, chat. 6 minutes, really, about 6 minutes. Amazon just broke highs of the day, and it's not even earnings today for Amazon. So it's not even releasing earnings. It just broke highs of the day. Somebody's saying, yeah, First Solar's out. Yeah, it all has to do with what you're watching, AB. So AB says your streams don't show up. It all has to do with what you're watching. First Solar posted right here. So they posted 291 versus 309. They missed EPS, missed revenue as well for First Solar. So they did not do good. Google barely moved. Well, I mean, Google went up from 170 to 176. It's up a few percent. Striker, Visa. Here's Visa. I think we posted Visa already. But yeah, 271, 258. They beat EPS, beat revenue. No, I don't, Jason. Too volatile for me. Just not my style. Too politically driven. Too much variance with the election coming up. It's just not my style. We had Mondelez come out as well. All right, guys, we got 5 minutes left. 5 minutes left. We got almost 2,000 watchers. Thanks so much. All right, so we got the full call coming out live for this too, chat, for Google. The full call is going to be streamed live here also, of course. It's 4:30. All right, Google's still pushing up to almost 176. AMD coming up as well. We got 4 minutes, chat. 4 minutes. Reddit also just released 16-cent profit versus 8-cent loss per share. Revenue of 350 million. They expected 310 million, so they beat EPS, beat revenue. Came in at an actual profitable quarter. AMD's coming out in about 3.5 minutes. Snap dumping down to $10 a share. Chipotle did drop. They posted... I hate it when they do this. Adjusted EPS was 27 cents for Chipotle. 17.4% increase. Total revenue, $2.8 billion for Chipotle. Snapchat is out. Here's Chipotle's numbers right here. I'll put those up in chat. In a couple minutes, you'll see when AMD numbers are out. They're not out yet. AMD numbers are scheduled to release in about 3 minutes. Snap posted 8-cent profit, beat the 5-cent estimates. Sales of 1.373 million or billion. Missed 1.35 estimates. Wait, no, that's wrong. Sales beat expectations. This is wrong for Snapchat. I think they got it wrong for Snapchat. There might be a little undervalued buy opportunity here. I'm not telling you to buy it. I have no freaking idea. But they beat EPS, beat revenue. Some companies negatively reported it. I don't know what Snapchat's going to do. Amazon just broke highs of the day, though. Again, AMD numbers scheduled to release in about 2.5 minutes. Visa numbers are out already. Just scroll up. I already posted them. It's way up there, but I posted them. Visa's right here. 271 versus 258, revenue of 9.6 versus 9.5. All right, watch AMD, guys. We got 2 minutes. 2 minutes left. The Google call's at 4:30. We're going to stream the whole thing live right here. Again, y'all subscribe if you haven't yet. Hit the notification bell. Thanks so much. We appreciate it. All right, here we go. Watch AMD, chat. Watch AMD. All right, guys. So, we got Apple. We got Nvidia. All right, guys. So, again, there goes AMD dipping a little bit, chat. It's down slightly. Slightly. Alphabet numbers are out. They're right below me. Just a weatherman in this area. Right around here. There's Alphabet earnings. We come in at 212 EPS versus 184 expected. It's starting to test highs of the day. Watch for AMD, guys. AMD numbers are supposed to drop in 5 seconds. All right, here we go. AMD numbers about to drop right now. Watch for volatility with AMD. They're not out yet. Waiting for AMD's numbers. They should drop any time now for AMD. All right, AMD down to 164. Is AMD dropping right now, chat? I don't think they're out. Oh, 164s. This looks like a potential earnings move. AMD is falling right now, chat. Look at AMD dump. Wow. AMD down to 150s. All right, so AMD did post their numbers here. AMD posted 6.8 billion revenue for the third quarter, 6.8 billion for AMD. Gross margin 50%, operating income 724 million, net income 771 million, EPS 47 cents. On a non-GAAP basis, though, gross margin 54%, operating income 1.7 billion, net income 1.5 billion, diluted EPS 92 cents a share, 92 cents a share. So that's AMD's numbers, and they're not reacting positively to it. They said, quote, "We delivered strong third quarter financial results with record revenue led by higher sales of EPYC and Instinct data center products and robust demand for our Ryzen PC processors. Looking forward, we see significant growth opportunities across our data centers, client and embedded businesses driven by the insatiable demand for more compute. We are pleased with our execution in the third quarter, delivering strong year-over-year expansion in gross margins and EPS," said AMD EVP CFO and Treasury Jean Hu. They said, quote, "We are on track to deliver record annual revenue for 24 based on significant growth in our data center and client segments," end quote. But they are not reacting positively to it. They're at 159.60 for AMD. AMD is reacting negatively here at 159.60. AMD again, 92 cents, flat expectations, revenue at 6.82 versus 6.71. So AMD beat revenue. Here, I'm going to put AMD's numbers up right here. So AMD beat EPS, or no, flat EPS beat revenue. Flat EPS beat revenue. You can see the numbers right there on the screen. So again, AMD, flat EPS, they expected 92 cents. They showed 92 cents. Revenue of 6.82, they expected 6.71. So they expected the same EPS that they showed, missed, or flat EPS. AMD for the fourth quarter guided at 7.8 billion versus 7.5 billion expected. I think this might be an overreaction on AMD. I think it could bounce. I'm not telling you it will, but they guided better than expected here. So here's the, we'll put this number up in chat, their guidance numbers. Again, here's AMD's guidance. So they actually guided better than expected here, better than expected. Quarter 3 GAAP EPS 92 cents in line. Sales of 6.8 versus 6.71. I don't know what the AMD is going to do. Not an investment professional. Don't copy me, but I think it could bounce here. Don't copy me. Not an investment professional. And there's the bounce. Again, AMD guided well, right? Their margins were flat, but they guided well. They had better guidance than expected. That's generally good. And they also had a big reaction on the downside, which I tend to think is an overreaction. Yeah, Google's up big. It's at 175.50s. I might be wildly wrong. Do not copy me. Top 3 worst analyst ever in the world. Don't copy me. AMD quarter 4 2024 revenue came in at 7.5 billion plus or minus 300 million. Okay, so they didn't guide better than expected. Why did it say they guided better than expected at 7.8 versus 7.5? Google is already out. Their numbers are right here on screen. Google's earnings call starts at 4:30 p.m. 4:30 p.m. Yeah, I think I was wrong about my bounce, but hey, that's all right. Also, guys, if you haven't already, again, check out Top Step. Top Step Funds Traders. They give you a demo. Again, one of my favorite strategies, people are asking me why I think AMD might bounce. One of my favorite strategies is waiting for an overreaction in stocks on earnings, seeing a stock drop big on earnings, and then bounce back short term. It happens very often, regardless of whether this one works or not. Anybody that watches my stream or has watched my streams longer than a few months generally understands that strategy. I'm not saying it's going to bounce. I could wildly be wrong here. I have no freaking idea, and there's definitely variance with it, so I'm never going to be absolutely right all the time. But usually I look for overreactions in earnings, and I buy those dips, or I short big pops. But I usually like buying the dips more. But again, if you haven't already, check out Top Step. Top Step Funds Traders. They give you a demo. They test your skill with it first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one's $49. For that $49 demo account challenge, they're going to give you a demo. If you can make $3K in profit without losing $2K, a 2 to 3 reasonable ratio, they fund you $50K with a 90% split, and they've paid out over $100 million. This is in the futures market, which has no PDT rule. You can day trade the S&P, the NASDAQ, basically the SPY and Q. No PDT restrictions. You can day trade currencies, gold, the Russell, Dow, all these things. That patterns are very similar to blue chip stock patterns. It's actually where most pro day traders day trade, is the futures market. Top Step's the most legit one in the world. There's 0 commissions on Top Step X. So if you're going to trade on Top Step X, there's literally no commissions here. One of the best platforms in the game, and the edge with 0 commissions in futures is powerful. Powerful. And again, if you lose, you're only out $50, and most day traders lose. And so if you want to check them out, here's the link. Great way to help support your boy here on this channel. I appreciate it. There's the bounce, chat. I mean, we said we could bounce. There's the bounce. I'm not saying we're going to continue to bounce. AMD Q3 center data revenue at $3.59 billion. Here's the link. Here's the numbers for data center revenue. Q3 GAAP EPS. Is Google's report so good? I mean, it was definitely good. Better than expected EPS, revenue, and guidance, I think, for Google, right? So let me see. So Google, again, I'm going to put all the numbers for Google, all the metrics up. But they did pretty good. Operating margin, 32%. Other bets revenue. I'm going to put all the stuff I can here. Operating income. Yeah, here's a full list of like everything that they got. Google Cloud revenue 11.35. Search and other revenue. Advertising revenue is $65.85 billion. Traffic acquisition costs. So here's the full list of metrics for Google right here. The last one is ads revenue for YouTube. All right, so here's the full list of all the different metrics for Google earnings right there. It might take a couple different chats to post it, but there's the full list. And it generally did pretty well. Pretty well. All right, we got the full earnings call going live here, though, chat, in 7 minutes, chat. The full earnings call live here in 7 minutes. I'll put the timer up. So, again, we got 6.5 minutes until the actual full call streamed. 6.5 minutes. We will stream the entire call live on stream, chat. So, full call streamed. $4:30 is when the call starts, chat. All right. I'll put this back up. All right, guys, the call starts in 5 minutes. 5 minutes for the full earnings call. What's up, Chuck? But yeah, there's the full list of all the numbers for Google. Like, look, here's the full list. Service revenue, other bets, operating income, Google Cloud revenue, Google search and other revenue, advertising revenue, traffic acquisition costs, ad revenue, all that stuff. So AMD gaming revenue came in at 462. I'll put some of these AMD numbers that people are asking for in chat. So here's a bunch of AMD's metrics right there. Why are uranium energy stocks going down when everyone needs it because of data centers? I'm not sure. All right, so the Google call is about to start pretty soon. Here, let me switch my headphones out. Starts in 5 minutes. Yeah, so we're gonna stream the entire earnings call at 4:30. Chat. I'm also gonna put both charts up here, both Google. We'll leave this up and we'll put a 5-minute chart up, so we can have both of them up right here. And then just let me know if you can hear the music. If you can hear the music, you're gonna be able to hear the earnings call. So let me know if you can hear the music now.
Over and over again.
So I'm gonna mute the background just to make sure you guys can hear it. Yeah, I'm sorry. I know you can hear my dog. That's Bruce. He's the protector of this house. Yeah, we're also going to do AMD earnings pretty soon, so stick around. We got the call waiting. Yeah, we got my headphones in. Yeah, we also got our AMD earnings call coming up too. So remember, we're going to stream both of these live. So stick around. We'll cover all of them. Let me set up the redirect force. And again, if you haven't already, check out Top Step. Great way to learn how to day trade. Do not risk your own money if you're trying to learn how to day trade. Almost all day traders lose. If you put up $5,000 of your own money, you're probably going to lose. Try a funded account program. It's a demo account test. Great way to learn how to day trade. If you want to check out the link, they're a sponsor of mine, an affiliate of mine. I'm biased, as always. Call's about to start right now, chat. Call's about to start right now. We're waiting on hold. Yeah, so we're waiting on hold. Better than expected EPS and revenue. Their highest highest quarterly revenue ever. There we go. All right, we're waiting on hold, chat. I'm sorry. Waiting for them to start. It should start pretty soon. In 1 minute. So they start in 1 minute, chat. Give me your last minute predictions. Again, Google starts their earnings call in 1 minute. Give me your last minute predictions, chat. Let me know what you guys think. Pretty good reaction so far, I think, no? All right, I'm making sure the sound works on the other end. I could definitely hear it on the other end. All right, let me know if you can hear it.
Everyone, thank you for standing by for the Alphabet third quarter 2024 earnings conference call. At
Sound
this
check.
time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during this session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Senior Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's third quarter 2024 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. Q3 was another great quarter. The momentum across the company is extraordinary, as you've seen in recent product launches, and as you'll hear on the call today. Our commitment to innovation, as well as a long-term focus and investment in AI, are paying off and driving success for the company and for our customers. We are uniquely positioned to lead in the era of AI because of our differentiated full-stack approach to AI innovation, and we are now seeing this operate at scale. It has three components. First, a robust AI infrastructure that includes data centers, chips, and a global fiber network. Second, world-class research teams who are advancing our work with deep technical AI research and who are also building the models that power our efforts. And third, a broad global reach through products and platforms that touch billions of people and customers around the world, creating a virtuous cycle. Let me quickly touch on each of these. We continue to invest in state-of-the-art infrastructure to support our AI efforts, from the US to Thailand to Uruguay. We are also making bold clean energy investments, including the world's first corporate agreement to purchase nuclear energy from multiple small modular reactors, which will enable up to 500 megawatts of new 24/7 carbon-free power. We are also doing important work inside our data centers to drive efficiencies while making significant hardware and model improvements. For example, we shared that since we first began testing AI overviews, we have lowered machine costs per query significantly. In 18 months, we reduced costs by more than 90% for these queries through hardware, engineering, and technical breakthroughs, while doubling the size of our custom Gemini model. And of course, we use and offer our customers a range of AI accelerator options, including multiple classes of NVIDIA GPUs and our own custom-built TPUs. We are now on the 6th generation of TPUs, known as Trillium, and continue to drive efficiencies and better performance with them. Turning to research, our team at Google DeepMind continues to drive our leadership. Let me take a moment to congratulate Demis Hassabis and John Jumper on winning the Nobel Prize in Chemistry for their work on AlphaFold. This is an extraordinary achievement and underscores the incredible talent we have and how critical our world-leading research is to the modern AI revolution and to our future progress. Also, congratulations to Jeff Hinton, who spent over a decade here on winning the Nobel Prize in Physics. Our research teams also drive our industry-leading Gemini model capabilities, including long context understanding, multimodality, and agentive capabilities. By any measure, token volume, API calls, consumer usage, business adoption, usage of the Gemini models is in a period of dramatic growth. And our teams are actively working on performance improvements and new capabilities for our range of models. Stay tuned. And they're building out experiences where AI can see and reason about the world around you. Project Astra is a glimpse of that future. We are working to ship experiences like this as early as 2025. We then work to bring those advances to consumers and businesses. Today, all 7 of our products and platforms with more than 2 billion monthly users use Gemini models. That includes the latest product to surpass the 2 billion user milestone, Google Maps. Beyond Google's own platforms, following strong demand, we are making Gemini even more broadly available to developers. Today, we shared that Gemini is now available on GitHub Copilot, with more to come. To support our investments across these 3 pillars, we are organizing the company to operate with speed and agility. We recently moved the Gemini app team to Google DeepMind to speed up deployment of new models and streamline post-training work. This follows other structural changes that have unified teams in research, machine learning infrastructure, and our developer teams, as well as our security efforts and our platforms and devices team. This is all helping us move faster. For instance, it was a small dedicated team that built NotebookLM, an incredibly popular product that has so much promise. We're also using AI internally to improve our coding processes, which is boosting productivity and efficiency. Today, more than a quarter of all new code at Google is generated by AI, then reviewed and accepted by engineers. This helps our engineers do more and move faster. I'm energized by our progress and the opportunities ahead, and we continue to be laser-focused on building great products. Let me turn now to the quarterly highlights. In search, recent advancements, including AI overviews, Circle to Search, and new features in Lens, are transforming the user experience, expanding what people can search for and how they search for it. This leads to users coming to search more often for more of their information needs, driving additional search queries. Just this week, AI Overview started rolling out to more than 100 new countries and territories. It will now reach more than 1 billion users on a monthly basis. We are seeing strong engagement, which is increasing overall search usage and user satisfaction. People are asking longer and more complex questions and exploring a wider range of websites. What's particularly exciting is that this growth actually increases over time as people learn that Google can answer more of their questions. The integration of ads within AI overviews is also performing well, helping people connect with businesses as they search. Circle to Search is now available on over 150 million Android devices, with people using it to shop, translate text, and learn more about the world around them. A third of the people who have tried Circle to Search now use it weekly, a testament to its helpfulness and potential. Meanwhile, Lens is now used for over 20 billion visual searches per month. Lens is one of the fastest growing query types we see on search because of its ability to answer complex multimodal questions and help in product discovery and shopping. For all these AI features, it's just the beginning, and you'll see a rapid pace of innovation and progress here. Next, Google Cloud. I'm very pleased with our growth. This business has real momentum, and the overall opportunity is increasing as customers embrace Gen AI. We generated Q3 revenues of $11.4 billion, up 35% over last year, with operating margins of 17%. Our technology leadership and AI portfolio are helping us attract new customers, win larger deals, and drive 30% deeper product adoption with existing customers. Customers are using our products in 5 different ways. First, our AI infrastructure, which we differentiate with leading performance driven by storage, compute, and software advances, as well as leading reliability and a leading number of accelerators. Using a combination of our TPUs and GPUs, LG AI Research reduced inference processing time for its multimodal model by more than 50% and operating costs by 72%. Second, our enterprise AI platform, Vertex, is used to build and customize the best foundation models from Google and the industry. Gemini API calls have grown nearly 14x in a 6-month period. When Snap was looking to power more innovative experiences within their My AI chatbot, they chose Gemini's strong multimodal capabilities. Since then, Snap saw over 2.5 times as much engagement with My AI in the United States. Third, customers use our AI platform together with our data platform, BigQuery, because we analyze multimodal data no matter where it is stored with ultra-low latency access to Gemini. This enables accurate real-time decision-making for customers like Hiscox, one of the flagship syndicates in Lloyd's of London, which reduced the time it took to quote complex risks from days to minutes. These types of customer outcomes, which combine AI with data science, have led to 80% growth in BigQuery ML operations over a 6-month period. Fourth, our AI-powered cybersecurity solutions, Google Threat Intelligence and Security Operations, are helping customers like BBVA and Deloitte prevent, detect, and respond to cybersecurity threats much faster. We've seen customer adoption of our Mandiant-powered threat detection increase 4x over the last 6 quarters. Fifth, in Q3, we broadened our applications portfolio with the introduction of our new customer engagement suite. It's designed to improve the customer experience online and in mobile apps, as well as in call centers, retail stores, and more. A great example is Volkswagen of America, who's using this technology to power its new MyVW virtual assistant. In addition, the employee agents we delivered through Gemini for Google Workspace are getting superb reviews. 75% of daily users say it improves the quality of their work. Moving now to YouTube. For the first time ever, YouTube's combined ad and subscription revenue over the past 4 quarters has surpassed $50 billion. Together, YouTube TV, NFL Sunday Ticket, and YouTube Music Premium are driving subscription growth for the platform. And we are leaning into the living room experience with Multiview and a new option for creators to organize content into episodes and seasons, similar to traditional TV. At Made on YouTube, we announced that Google DeepMind's most capable model for video generation, Veo, is coming to YouTube Shorts to help creators later this year. Next, platforms and devices. Gemini's deep integration is improving Android. For example, Gemini Live lets you have free-flowing conversations with Gemini. People love it. It's available on Android, including Samsung Galaxy devices. We continue to work closely with them to deliver innovations across their newest devices, with much more to come. At Made by Google, we unveiled our latest Pixel 9 series of devices featuring advanced AI models, including Gemini Nano. We have seen strong demand for these devices, and they've already received multiple awards. Turning to other bets, I want to highlight Waymo, the biggest part of our portfolio. Waymo is now a clear technical leader within the autonomous vehicle industry and creating a growing commercial opportunity. Over the years, Waymo has been infusing cutting-edge AI into its work. Now, each week, Waymo is driving more than 1 million fully autonomous miles and serves over 150,000 paid rides. The first time any AV company has reached this kind of mainstream use. Through its expanded network and operations partnership with Uber in Austin and Atlanta, plus a new multi-year partnership with Hyundai, Waymo will bring fully autonomous driving to more people and places. By developing a universal driver, Waymo has multiple paths to market. And with its 6th-generation system, Waymo has significantly reduced unit costs without compromising safety. Before I close, I'm delighted to welcome our new CFO, Anat. We are thrilled to have her on board, and you will hear from her shortly. And as always, I want to express my gratitude to our employees worldwide. Your dedication and hard work have made this another exceptional quarter for Alphabet. Now, over to you, Philip.
Thanks, Sundar, and hello, everyone. I'll start with performance for the quarter and then describe the progress we're seeing across ads, YouTube, and partnerships, highlighting the impact AI is already having on our business. Google Services delivered revenues of $76.5 billion for the quarter, up 13% year-on-year. Search and other revenues grew 12% year-on-year, led by growth in the financial services vertical due to strength in insurance, followed by retail. YouTube ads revenues grew 12% year-on-year, driven by brand, closely followed by direct response. Network revenues were down 2% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues were up 28%, driven by growth in subscriptions as well as the launch of our Made by Google devices in the third quarter. Before I double-click into ads, YouTube, and partnerships, a few comments on search. Whether using their voice to find answers on the go or opening their camera to explore the world around them, people are expanding how they ask questions in search, as well as the type of questions they ask. New behaviors create new opportunities to help us connect businesses and consumers via amazing commercial experiences. As Gen AI expands what's possible, we continue to see a significant opportunity in search. Let me take a minute to explain why. AI really supercharges search. Our new AI-powered features make searches more helpful, and we continue to see great feedback, particularly from younger users. For example, with Circle to Search, where we see higher engagement from users aged 18 to 24. AI is expanding our ability to understand intent and connect it to our advertisers. This allows us to connect highly relevant users with the most helpful ad and deliver business impact to our customers. Let me share 2 new ad experiences we have rolled out alongside our popular AI-powered features in search. First, as you heard from Sundar, every month Lens is used for almost 20 billion visual searches, with 1 in 4 of these searches having commercial intent. In early October, we announced product search on Google Lens, and in testing this feature, we found that shoppers are more likely to engage with content in this new format. We're also seeing that people are turning to Lens more often to run complex multimodal queries, voicing a question or inputting text in addition to a visual. Given these new user behaviors, earlier this month, we announced the rollout of shopping ads above and alongside relevant Lens visual search results to help better connect consumers and businesses. Second, AI overviews, where we have now started showing search and shopping ads within the overview for mobile users in the US. As you remember, we've already been running ads above and below AI overviews. We're now seeing that people find ads directly within AI overviews helpful because they can quickly connect with relevant businesses, products, and services to take the next step at the exact moment they need. As I've said before, we believe AI will revolutionize every part of the marketing value chain. Let's start with creative. Advertisers now use our Gemini-powered tools to build and test a larger variety of relevant creatives at scale. Audi used our AI tools to generate multiple video, image, and text assets in different lengths and orientations out of existing long-form videos. It then fed the newly generated creatives into demand gen to drive reach, traffic, and booking to their driving experience. The campaign increased website visits by 80% and increased clicks by 2.7 times, delivering a lift in their sales. Last week, we updated image generation in Google Ads with our most advanced text-to-image model, Imagen 3, which we tuned using ads performance data from multiple industries to help customers produce high-quality imagery for their campaigns. Advertisers can now create even higher performing assets for PMax, demand gen, app, and display campaigns. Turning to media buying. AI-powered campaigns help advertisers get faster feedback on what creatives work where and redirect their media buying. Using demand gen, DoorDash tested a mix of image and video assets to drive more impact across Google and YouTube's visually immersive surfaces. They saw a 15 times higher conversion rate at a 50% more efficient cost per action when compared to video action campaigns alone. Last and most importantly, measurement. This quarter, we extended availability of our open source marketing mix model Meridian to more customers, helping to scale measurement of cross-channel budgets to drive better business outcomes. On YouTube, we remain focused on building a platform that enables creators to thrive and unlocking a whole new world of creativity with AI. Creators are at the heart of the YouTube ecosystem, and the content they are making is driving robust growth in watch time across the platform. We're also using AI to greatly improve recommendations on YouTube. Driven by Gemini, our large language models have a deeper understanding of video content and viewers' preferences. As a result, they can recommend more relevant, fresher, and personalized content to the viewer. Short-form creation continues to thrive on YouTube. Shorts monetization improved again this quarter, and we continued to significantly close the gap with in-stream video, particularly in the US and other more highly monetizing markets. Of all the channels uploading to YouTube each month, 70% are uploading shorts. And we recently announced a top requested feature, the ability to upload shorts up to 3 minutes long. Also, advertisers can now book first position on shorts blocks in close to 40 markets. We're unlocking more opportunities in the living room. Our momentum here continues as we maintain our status as the #1 streamer in the US, according to Nielsen. This is driven by the strength of our creators, such as Michelle Carr and Red and Link, who are increasingly crafting experiences designed specifically for the big screen. And it's paying off. The number of creators making the majority of their YouTube revenue on TV screens is up more than 30% year on year. YouTube is becoming a premier destination for sports watching. People come for the game and stay for the commentary and around the game content from creators like Evelyn Gonzalez, Adam W., and Brad Coleman. During the Olympics, content from Paris 2024 had over 12 billion views on YouTube. More than 850 million unique viewers watched over 40 billion minutes of content, with 35% on their TV screens. And recently, we kicked off our second season of NFL Sunday Ticket on YouTube TV, which continues to receive a positive reception from advertisers, our partners at the NFL, and fans. We have continued to invest in our product experience with improvements to multi-view and deeper integrations for fantasy football fans. Following up on my remarks from last quarter about Brandcast, we had a strong upfront performance with commitments up about 20% year on year. As always, let me wrap with the strong momentum we're seeing in partnerships. More and more of our partners are recognizing the breadth of our technologies and building solutions that leverage the very best of Google. For example, our recently announced strategic partnership with Vodafone Group spans Google Cloud, AI, Android, ads, and digital services. This multi-billion-dollar partnership will bring these technologies to more than 330 million customers across Europe and Africa. We're collaborating on more than 30 initiatives across 7 areas, including generative AI for consumers, a best-in-class TV platform, hardware, and cybersecurity. With that, a heartfelt thank you to Googlers everywhere for their extraordinary commitment, and to our customers and partners for their continued collaboration and trust. Anat, welcome to the team. It's great to have you with us. Over to you.
Thank you, Philip, and thanks, Sundar, for the words of welcome. My comments will focus on year-over-year comparisons for the third quarter, unless I state otherwise. I will start with the results at the Alphabet level, and will then cover our segment results. I'll end with high-level commentary on investment at the Alphabet level. We had another strong quarter in Q3 with robust momentum across the business. Consolidated revenue increased by 15%, or 16% in constant currency. Search remained the largest contributor to revenue growth, followed by robust 35% growth in cloud. Total cost of revenue was $36.5 billion, up 10%. Tech was $13.7 billion, up 9%. We continue to see a revenue mix shift, with Google Search growing at double-digit levels, while network revenue, which have a much higher tech rate, declined. Other costs of revenue was $22.8 billion, up 11%, with the increase primarily driven by content acquisition costs primarily for YouTube, an increase in depreciation associated with higher level of investment in our technical infrastructure, and higher hardware costs associated with the pull forward of our Made by Google launches from the fourth to the third quarter. Total operating expenses increased 5% to $23.3 billion. The increase was primarily driven by facilities-related charges as results of action were taken to further optimize our office space footprint globally, followed by depreciation, partially offset by a year-on-year decline in charges for legal and other matters. R&D investments increased by 11%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting investment in advertising and promotional efforts related to the Made by Google launches, as well as for AI and Gemini. G&A expenses declined by 10%, primarily due to lower charges for legal and other matters. Operating income increased 34% to $28.5 billion, and operating margin increased to 32%. Net income increased 34% to $26.3 billion, and earnings per share increased 37% to $2.12. We're pleased with the progress we're making in re-engineering our cost structure, which is reflected in our operating margin expansion this quarter, while also continuing to invest in the business to bring innovation to consumers, creators, and enterprises. We delivered free cash flow of $17.6 billion for the third quarter and $55.8 billion for the trailing 12 months. Year-on-year free cash flow was negatively impacted by the following items. In 2023, we deferred cash tax payments from the second and third quarter to the fourth quarter. And in Q3 2024, we made a $3 billion cash payment related to the 2017 EC shopping fine. We ended the quarter with $93 billion in cash and marketable securities. Now turning to segment results. Google Services revenue increased 13% to $76.5 billion. Google Search and other advertising revenue increased by 12% to $49.4 billion. The robust performance of Search was broad-based across verticals, led by the financial services vertical due to strength in insurance, followed by retail. YouTube advertising revenue increased 12% to $8.9 billion, driven by brand, followed by direct response advertising. As Philip mentioned, we're seeing strong momentum in YouTube, including robust growth in watch time across the platform, and are excited about the new features and products we're bringing to creators. Network advertising revenue of $7.5 billion were down 2%. In the third quarter, the year-on-year growth in all our advertising revenue lines was impacted by the increase in strength in advertising revenue in Q3 of last year, in part from APAC-based retailers. Subscription platforms and devices revenue increased 28% to $10.7 billion, reflecting growth in subscription revenues as well as the launch of our Made by Google devices in the third quarter. We continue to have significant growth in our subscription products, driven primarily by YouTube TV and YouTube Music Premium, as well as Google One, primarily due to increases in the number of paid subscribers. With regards to platforms, we're pleased with the performance in Play, primarily driven by an increase in buyers. Google Service operating income increased by 29% to $30.9 billion, and operating margin was 40%. Turning to the Google Cloud segment, which continued to deliver very strong results this quarter. Revenue increased by 35% to $11.4 billion in the third quarter, reflecting accelerated growth in GCP across AI infrastructure, generative AI solutions, and core GCP products. Once again, GCP grew at a rate that was higher than cloud overall. We also saw strong Google Workspace growth, primarily driven by increases in average revenue per seat. As you just heard from Sundar, the robust innovation and expanded AI offerings within our cloud business are allowing existing and new customers to realize measurable business benefits, including reduced cost, greater customer engagement, faster response time, and better revenue conversion. Google Cloud operating income increased to $1.9 billion, and operating margin increased to 17%. The operating margin expansion was driven by strong revenue performance across cloud AI products, core GCP, and Workspace, as well as ongoing efficiency initiatives. As to our other bets, for the third quarter, revenue were $388 million, and operating loss was $1.1 billion. I'll highlight just a couple of accomplishments in the quarter for Waymo and Wing. We're excited about the progress we're seeing in Waymo, as Sundar mentioned, and the increase in the number of paid rides. We're planning to continue to expand our geographic coverage and reach more customers in existing markets and new markets. Wing, our drone delivery company, recently passed the one-year anniversary of scaling its partnership with Walmart in the Dallas-Fort Worth area, now operating in 11 stores and serving 26 different cities and towns. Turning to Alphabet-level activities, the largest component of this line is our investment in AI research and development activities, which support all of Alphabet. There were two notable items that impacted the operating loss in Alphabet-level activities. First, a $607 million charge related to decisions we've made to further optimize our physical footprint and office space globally. And second, our ongoing investments in AI R&D, including the full core effect of the organizational changes we've made in May to move some additional AI teams from Google Services to Google DeepMind. With respect to CapEx, our reported CapEx in the third quarter was $13 billion, reflecting investment in our technical infrastructure, with the largest component being investment in servers, followed by data centers and networking equipment. Looking ahead, we expect quarterly CapEx in the fourth quarter to be at similar levels to Q3, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. Our expansion of data center capacity is expected to bring economic benefits to countries and communities where we are investing. In the third quarter alone, we made announcements of over $7 billion in planned data center investments, with nearly $6 billion of that in the U.S. In Q3, we also returned value to shareholders in the form of $15.3 billion in share repurchases and $2.5 billion in dividend payments. Overall, we returned a total of nearly $70 billion over the trailing 12 months to shareholders. As we look forward, we're working to balance our investments in AI and other growth areas with the cost discipline needed to fund those activities. As we think about the remainder of 2024, there are a couple of dynamics to consider. In terms of revenue, year-on-year growth in advertising revenue will continue to be impacted by the increasing strength in advertising revenue in the second half of 2023, in part from APAC-based retailers. And there will be a headwind to year-over-year growth in subscription platforms and devices revenue in the fourth quarter due to the pull forward of our Made by Google launches into the third quarter this year. In terms of expenses, we'll continue to see increases in depreciation and expenses associated with higher level of investment in our technical infrastructure, partially offset by a slight benefit from the cost revenue associated with our devices due to the pull forward of hardware launches into Q3. Now, before going into Q&A, as the new CFO, I would like to share a few thoughts on how I'm approaching and thinking through growth, cost structure, and capital allocation, and expect to hear more from me on these topics in the coming quarters. As I look at the business, I see opportunities for further growth propelled by AI and the underlying momentum across the business. You heard about some of these on the call today. I also believe that we are well positioned to deliver meaningful innovation, which will translate to revenue, given our strength in the core pillars that are required to succeed in AI at scale. Realizing those opportunities and great innovation in AI requires global reach, which we have through our product set platforms, as well as continued meaningful capital investment. And while we have a strong balance sheet to be able to support these investments, we will be looking for efficiencies so that we can fund innovation in priority areas. Sundar, Ruth, and our leadership team started important work to re-engineer our cost structure, including efforts such as optimizing our headcount growth, our physical footprint, improving the efficiencies of our technical infrastructure, and streamlining operations across the company through the use of AI. I plan to build on these efforts, but also evaluate where we might be able to accelerate work and where we might need to pivot to free up capital for more attractive opportunities. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have a two-parter, Sundar. The first one, over the course of the last year plus, you've sort of showcased a lot of different types of new Gen AI-enabled search products to sort of reimagine the search experience. Can you help us hone in on one or two of these products that you're most excited about that you think over the next 2 to 3 years could really lead to more durable multi-year search growth once they scale? And then the second one, just as we're sort of thinking through constraints to how quickly they come out, what are sort of the key constraints that you see to really reimagining search and scaling it out across 2 to 3 billion people? Thanks.
Thanks, Brian. Great question. Look, it's been an extraordinary year of innovation. I mentioned in my remarks about Circle to Search, Lens, now with video search, approaching over 20 billion queries a month, and obviously AI overviews. And with each of these changes, we are definitely expanding what's possible in search. And it's been really heartening to see users adapt. They understand they can ask more queries, they come back more often, and so, and we have seen growth there. I think we are, while we've rolled out AI overviews to over 1 billion users, there is a lot more innovation there we are actively working on. So I expect search to continue to evolve significantly in 2025, both in the search product and in Gemini. And so, I think that's the opportunity ahead. I think we are in early days of what is a powerful new technology, and with it, I think we can do a lot more for our users, but at the same time underpin it on the foundational bedrock of quality and trust and user experience, which we have always done. So we are at 1 billion people. I don't necessarily see a constraint there. Obviously things like latency, cost per query, etc. But as you've seen us over the past 18 months make substantial progress. So we'll continue rolling it out more, and we'll keep evolving it. I think search, if I were to take a 12-month outlook, I think is going to continue to evolve and will be at the forefront of that innovation.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Great, thanks for taking the question. Perhaps for Sundar and Anat, can you talk more about the infrastructure advantages and CapEx efficiencies you've generated from Google's own TPUs, and how does that influence your CapEx spending going forward relative to peers and other leading cloud service providers? Thanks.
Thanks, Doug. I'll take the first part, and Anat can give color on the CapEx spending part. Look, I think we are well positioned because in our AI infrastructure we have a comprehensive solution set. Right, we have all the leading AI accelerators, GPUs, TPUs, as well as CPUs, and we are investing in all of them. We have a wonderful partnership with NVIDIA. We are excited for the GB200s, and will be one of the first to provide it at scale. On the TPU front, I think we have not only are we in our 6th generation, I just spent some time with the teams on the roadmap ahead. Couldn't be more excited at the forward-looking roadmap, but all of it allows us to both plan ahead in the future and really drive an optimized architecture for it. And I think because of all this, both we can have best-in-class efficiency, not just for internal at Google, but what we can provide through cloud. And that's reflected in the growth we saw in our AI infrastructure and Gen AI services on top of it. So I'm pretty excited about how we are set up, and we'll continue executing there. And maybe Anat can give comments on the CapEx spending.
Yeah, sure. So let me provide a little more color on our capital investments, and certainly an important area in this time of investments in AI. As you saw in the quarter, we invested $13 billion in CapEx across the company. And as you think about it, it's divided into two categories. One is our technical infrastructure, and that's the majority of that $13 billion. And the other one goes into areas such as facilities, the bets, and other areas across the company. Within TI, we have investments in servers, which includes both TPUs and GPUs. And then the second categories are data centers and networking equipment. This quarter, approximately 60% of that investments in technical infrastructure went towards servers, and about 40% towards data center and networking equipment. And as you think about them, we offer both GPUs and TPUs, both internally and to our customers. So we have choices and options based on what our customer needs and what our internal needs are. And as you think about the next quarter and going into next year, as I've mentioned in my prepared remarks, we will be investing in Q4 at approximately the same level of what we've invested in Q3, approximately $13 billion. And as we think into 2025, we do see an increase coming in 2025, and we will provide more color on that on the Q4 call. Likely not the same percent step up that we saw between 23 and 24, but additional increase.
The one other thing I would add on Doug, on your first part of the question on the TPUs is, if you look at the flash pricing we've been able to deliver externally, I think, and how much more attractive it is compared to other models of that capability, I think probably that gives a good sense of the efficiencies we can generate from our architecture, and we are doing the same that for internal use as well. The models for search, while they keep going up in capability, we've been able to really optimize them for the underlying architecture, and that's where we are seeing a lot of efficiencies as well.
Thank you.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you for taking the questions, and Anat, congrats on the new role and welcome to Alphabet. Sundar, maybe one for you on Waymo. What are the key learnings as Waymo has rolled out to additional cities in terms of consumer adoption of the product and how you think about go-to-market strategies for Waymo? And then maybe one for Philip, in terms of looking at YouTube trends by long-form versus short-form video or shorts, how are you seeing consumption versus monetization trends continue to evolve for YouTube as broken down maybe in that means? Thank you.
Thanks, Eric. On Waymo, obviously, it's been an exciting year, both in the Phoenix market and in San Francisco. We've definitely scaled, and particularly scaled paid rides, and definitely it's surprised us on the positive in terms of how much consumers are loving the experience from a safety standpoint, privacy standpoint, reliability standpoint, etc. So I think all of that has been on the positive side, and obviously the product will continue to improve. So for us, we are mainly focused on each city as we go. The pace at which we can now do an additional city gets easier. So we are definitely accelerating that way. That's why you've seen us move into LA. We're also, striking partnerships in newer and unique ways, hence the Uber partnership and expansion to Austin and Atlanta. And we have more options where we are looking at the driven by Waymo model with other network partners, fleet managers, etc. So it's an exciting moment, but we are still obviously being safety focused, but are looking to scale and testing out a variety of models, and which will help us plan ahead well for 2025 and beyond.
Yes, and to your question on YouTube Shorts, consumption versus monetization, maybe we start with the watch time. It continues to grow actually across YouTube with particular strength in Shorts and in the living room. Just to give you a number, over 70 billion YouTube Shorts are watched every day. On the monetization side, the monetization rate of Shorts relative to in-stream viewing is continuing to show a healthy rate of growth. The gap continues to narrow, particularly in the US. We also see it in other more highly monetizing markets. And we continue to work very closely with our advertisers. We're committed to providing them with very effective ways to reach the growing audience here. I talked about advertisers now being able to book first position on Shorts blocks. That's exciting. Shorts are also integrated into video reach campaigns, YouTube Select. So you're really giving brands the precise targeting options here. So yeah, we're pleased with the progress we're making here.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Hey, everybody. Thanks for taking questions. Congrats, Anat. Two, if that's okay. So first, Sundar, given the high stakes around native AI product usage, are there any milestones you can share around where Gemini usage is compared to the 250 million weekly active users that ChatGPT is seeing right now? And then the second question is, I'm sure this is something that you guys have been thinking about for a while, but it looks like the way that the Google versus DOJ search trial is going, there's a decent likelihood that the Apple ISA contract and some of the Android pre-install contracts are going to be voided out at some point in the future. So I guess the question is, what plans do we have in place to recapture some of the usage that might be going away in those search access points? How can we gain share on iOS queries if the Safari toolbar access point were to change? Thank you very much.
Thanks, Ross. Look, I think, obviously we are serving Gemini across a lot of touch points, including it's now, over 1 billion people are using it in search accessing. We are getting it across our products. The Gemini app itself has, very strong momentum on user growth. Our API volume, I commented on the Gemini APIs having gone up 14x in the past 6 months. So we are seeing growth across the board, and the Gemini integration into Google Assistant is going super well on Android. The user feedback is positive, so we are continuing to roll that out more. So I think you will see us. We are investing in the next generation of models, and as part of that, we are investing in scaling up the usage of the both directly to the models as well, both on the consumer and the developer side. So I think I'm pleased with the momentum there. On the second, on the legal, trials, obviously, I don't want to, it's not appropriate for me to speculate, given it's in the middle of ongoing litigation. But what I would say is, stepping back. Look, we've always, and even as the court acknowledged, clearly. We've reached a position of success because we've deeply innovated, and we are continuing to do so. People have chosen us, because they view it as the best product, be it consumers or partners. And we have a long track record of working hard to make sure our products are as easily available to users as possible across all platforms. So, all that approach and all the learnings over the years, I think will all be, will give us a strong foundation. First of all, we plan to vigorously defend, these cases, and some of the early proposals from the DOJ, et cetera, have been far-reaching, and we plan to, I think they could have unintended consequences, particularly to the dynamic tech sector and the American leadership there, and so we plan to engage very vigorously there. Thanks.
Thank you.
Your next question comes from Justin Post with BAML. Your line is now open.
Great, thank you. I wanted to ask a little bit more about AI overviews, maybe two parts. You mentioned you're seeing increasing queries or activity. Could you help us understand that for the billion users who have had access to the product, what you're seeing there? And then on the monetization side, is there a chance that AI overviews would help monetize some of the information queries that maybe you weren't making much monetization from with old formats? Thank you.
Thanks, Justin. Look, I think the main thing I would say is, as we have rolled out, we're obviously now scaling it out. We just rolled it out to 100 new countries and territories, and that's what will get us to 1 billion users. But amongst the users where we had already rolled out, we clearly see strong engagement. It's one of the most positive user satisfaction launches we have done in search, and it is increasing overall search usage. Like, people are asking more complex questions, different types of questions. They are exploring a wider range of websites, and what's particularly exciting is that this growth actually increases over time as people learn to adapt to that new behavior. So, so I'll stick to those comments, and I think to the second part of your question on the monetization side, I think Philip can answer more there. Philip.
Yeah, so look, the transition here is working well, including for ads. As you know, we recently launched ads within AI overviews on mobile in the US. And this really builds on our previous rollout of ads above and below the AI overviews. So overall, for AI overviews, we see monetization at approximately the same rate, which gives us a really strong base on which we can innovate even more. And specifically to your question of monetizing queries where we weaken monetization potentially at the moment, yes, I can see that there is an opportunity for that.
Thank you.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar. Sundar, there was this perception, and it even false, that Alphabet was not as innovative on AI as they should. And it clearly shows that that was wrong. You're moving pretty quickly, rolling out new products. Can you talk a bit about how you may have changed your org structure? I know you've combined some assets, but talk a bit about how you maybe rethought how you go to market with some of your innovation products, and maybe what's changed operationally as AI has picked up steam for you guys.
Thanks, Michael. Look, I definitely think it's an extraordinary opportunity, and I think the company, given the important moment, we had to gear up to build models from scratch that could be productionized at scale, on our architecture, and that's what the Gemini era was about. So there was a fixed cost of getting it all set up and getting the Gemini era underway. But now I think we are in much more of a virtuous cycle with a lot of velocity in the underlying models. We've had 2 generations of Gemini model. We are working on the 3rd generation, which is progressing well. And teams internally are now set up much better to consume the underlying model innovation and translate that into innovation within their products. So now, all the 7 products which have 2 billion users each have done their first versions of incorporating Gemini, and there is aggressive roadmap ahead for 2025. I mentioned earlier search alone. I think there's a lot more we can do, and we are also enabling smaller teams to ship newer experiences. And Notebook LM was the first instantiation of those types of efforts as well. Through it all, but then we had to do this when the company evolved from desktop to mobile. We are restructuring the company. Effectively, if you think of Google as a neural network, we are forming new synapses, which work much better to adapt to this moment. And I think that sets us up well for the year ahead. And we are bringing all of this innovation to the outside world through cloud as well. And so we are going to do that. And so that's an additional opportunity at this moment.
Thanks, Sundar.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, I'd like to ask 2 questions, please, to Anat. First, the margins at cloud have really started to ramp nicely. There are comps in the industry with still materially higher operating margins. I imagine that's a matter of scale and trying to catch up from a 3rd place position. But how do you think about the margin trends that you're seeing, and what's your level of confidence that those margins can kind of match up to other industry players that are doing closer to 30% margins? And then secondly, just across the board, when you think about the business that's running at 32% operating margins this last quarter, and you come in looking at this fresh, is it clear to you that there are a lot of kind of newfound cost efficiencies or ongoing cost efficiencies? Like, what do you see as the biggest opportunities to kind of take those margins and maybe over time take them materially higher? Thank you very much.
Thanks, Mark, for both of these questions. Let me start on the cloud margin. So certainly very pleased to see not just the top line growth rate, but the margin expansion to 17%. Really outstanding work by our cloud team to drive continued benefit to customers. And as you think about that margin expansion, really it's a few things. You've mentioned one of them. The first is scale. Obviously, as we scale the business, we have more opportunity for margin expansion. But the second, and shouldn't be underestimated, is the work the team has done to drive efficiencies across the cloud business. And we're seeing those come through, whether it was through headcount management or facilities management, other process efficiencies. We're seeing that go to the bottom line and driving the results you're seeing this quarter. Hard to obviously compare to any of our peers or competitors. It's a different business, but more to come. Now, the one thing to remember, and I've mentioned this in my prepared remark, this is an area that requires investment. And a lot of this investments, you think about servers, et cetera, is based on demand we're seeing from customers. So this will translate to revenue in the fairly short term. But that means there are headwinds associated with the annual run rate or costs associated with these investments, whether it's in the form of depreciation or just construction costs that are not capitalized, et cetera. So we'll continue to drive efficiency in the business to try and offset some of these. But this is how I'm thinking about the dynamics for cloud. Overall for the business, this is one of my key priorities, is to look across the organization to see what we can do in terms of driving further efficiencies. There's really good work that was done, started by Ruth, Sundar, and the rest of the lead team to re-engineer the cost base. But I think any organization can always push a little further. And I'll be looking at additional opportunities really across all the elements that I've mentioned on my prepared remarks, think not just about the size of the organization, but mostly how we operate and how we run the business. And I think when you simplify the organization, Sundar just made a few comments on that. When we use AI within our own processes and how we get work done, there are some efficiencies or opportunities for efficiencies. Now, all of that will go against substantial increases in capital investment, as I've mentioned, going into 2025. And again, I'll give more color when we are on the Q4 call. So hopefully we'll be able to drive efficiencies to work towards offsetting some or all of that increase.
Thank you very much.
Our next question comes from Ken Gurelski with Wells Fargo. Your line is now open.
Thank you so much, too, if I may. First, just on search, why does it make sense to have why doesn't it make sense to have two completely different search experiences? One, an agent-like answers engine, and then two, a links-based, more traditional search engine. You could innovate on both and let the consumer decide. Maybe think of it as the ultimate A/B test. So I'd be curious to get your thoughts there. And then the second, if you could touch a little bit on the consumer environment in 4Q, perhaps nobody has a better view into the health of the consumer in multiple verticals. If you could talk a little bit about, you talked about tougher comps on the Asia e-commerce side, but any other trends you could point out, be it around the election or fewer holiday days this year, that would be really helpful. Thank you.
Ken, why don't I take the first part, and then Philip can give color on the consumer vertical trends. On the first part, look, in this moment, people are using a lot of buzzwords like answer engines and all that stuff. I mean, Google started answering questions about 10 years ago in our search product with featured snippets. So, look, I think ultimately you are serving users. User expectations are constantly evolving. And we work hard to stay a step ahead, anticipate and stay a step ahead. And this is why we've kind of really brought multimodality on the input side and the output side in search pretty natively. And so, we'll continue expanding innovations there. I do think having two surfaces for us allows us to experiment more, and I view this moment as a moment in which there are new use cases which we will be able to do, which we couldn't have done before. And so having the flexibility, having product surfaces where we can move very, very fast, I think is actually helpful. And so we are embracing it and going to lean into this moment like we have done in the past year. And I think that'll play out well for users. Philip?
Yes, on the vertical trends, look, I called out search and other revenues being led by growth in the financial services due to improved economics in the insurance industry, followed by retail. But I think it's fair to say in general, we saw broad-based strength across all verticals, maybe specifically to election-related ad spend. We had a slight tailwind from election-related ad spend in the third quarter, which was a little bit more pronounced in YouTube ads.
And our last question comes from Stephen Ju with UBS. Your line is now open.
Okay, thank you so much. So, hi, Sundar. I think in two separate blog posts from Google Cloud talking about the real-life use cases for Gen AI, I think you highlighted what was a pretty material increase in a number of companies that are starting to turn their, ideas into products. I think it was like a 80% increase in a 6-month period. And I think you guys also published some survey data saying that your customers are generating tangible ROI there. So, can you update us on what you're seeing in terms of sales cycles, perhaps accelerating, and, how much of the heavy lifting the cloud team may have to do to help your customers turn those ideas into reality more quickly? And Philip, I think one of the feedbacks that we're getting from advertisers is that while the initial use case for PMax for them was in search, they're starting to use it more and more for mid and upper funnel campaigns and budgets as well. So can you talk about whether that's an anecdote or something that you're already seeing perpetuate among all of your advertisers? Thank you.
On the cloud side, look, I think on the cloud side, look, I do think you hinted in your question itself. Definitely, customers are leaning in this moment. Wherever we have been working, we are definitely seeing real concrete proof points delivering real impact, right? And be it in their user experience, be it in the bottom line, etc. And so I gave a few examples on my remarks, and I think customers are getting savvier. We ourselves are going through a lot of learnings, both in deploying this within Google as an enterprise and bringing those learnings to our customers outside. And as we see common patterns across the breadth of sectors we serve in, I think we're bringing those learnings. So I would say, if anything, I think over time, I think organizations are beginning to understand more. They are leaning in. Our models are getting better. We are building more comprehensive solutions on top of it. So I think we are well set up for 2025, and I think there will be continued momentum in this area.
And on the PMAX side, look, we continue to see success with PMAX, and we see those success stories really from large advertisers, from agencies, from SMBs, across marketing objectives, across different verticals. It's a very cost-effective, and it really finds customers wherever they are across all the different Google channels. And with the introduction of Gemini, we added a lot new features to PMAX. For example, to deliver more powerful performance, help advertisers scale, build high-quality creative assets, and so on. But going directly to your question on the funnel, also keep in mind we have a great product with Demand Gen that is all about inspiring consumers beyond the initial awareness and to take action. And we think Demand Gen is actually a very powerful tool to win in today's marketplace with marketers. And we can't wait to see actually what more value it will drive.
Thank you.
Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2024 call. Thank you, and have a good evening.
All right, guys, so that is it for today. Honestly, Google had a great call, a great earnings report, broke 180s at one point and back down to 178.15s. Again, don't go anywhere. As soon as we close this stream, it's going to bring you to the AMD earnings call. And if you look up AMD's a little volatile today. It dropped a lot. It's still down at 150. So again, stick around. We're going to bring you right to the AMD earnings call now. I'll see you guys over there.